They are pieces of a much larger puzzle. They are not your crystal ball. If you're constantly hopping from one indicator to the next, trying to find one that confirms what you want to believe, you're not being strategic. You're being emotional. You're trading on hope. And hope is a one-way ticket to Wreck City. Because correlations work until they catastrophically don't. And when they break hard, and they take your capital with them. So if all these fancy indicators are just noise, what actually matters? What's the one signal that has never lied about alt season? It's painfully simple. So simple, most people miss it whilst they're staring at 17 different oscillators. Look at every single alt season in history. Go back, do the work. Altcoins only pump, I mean really pump, when retail has money. And retail only has money, disposable income to ape into speculative dog coins, when two things are true. Interest rates are low, liquidity is flowing. Let's look at the evidence. In 2017, rates were falling. QE from previous years was sloshing around. The market ripped. Then in 2021, rates were at zero, trillions upon trillions printed out of thin air. COVID stimmy checks hitting bank accounts. It wasn't just alt season, it was alt season on steroids. Today, interest rates are at 20-year highs. Quantitative tightening is actively sucking liquidity out of the system. Money is expensive. This isn't about vibes, it's about monetary policy. If money is expensive and scarce, if your mortgage payment just doubled, if credit card debt is crushing everyone, are you really going to be throwing your paycheck into Floki cum Rocket Inu? No! Alts don't fly when retail's broke. Period. And retail will stay broke until the Fed cuts rates and stops QT, which will happen when inflation falls. It's simple. Less inflation means people have more spending money and the Fed lowers rates. Lower rates means borrowing becomes way cheaper. This means people have more money to burn, which means they gamble it on altcoins and other things. That's what we need. Everything else is a distraction. So what's the play? Sell everything, curl up in a ball and, I don't know, cry? No, absolutely not. But remember, this isn't financial advice. I ain't your dad. But I'll tell you my plan. It's called weaponized patience. Step 1, I stop chasing. There's no need to chase alt season. The market will tell me when it's time. I don't need to force it. Step 2, I hold high conviction assets, projects with real fundamentals, real utility, strong narratives that will survive the winter. This isn't about gambling on 1000x moonshots right now. It's about survival and positioning. Step 3, I wait for the Fed to flip. And I mean a real flip, not just dovish talk. I'm waiting for actual rate cuts. I'm waiting for an end to QT. I'm waiting for the action that signals money is about to get cheap again, because personally, that's when I believe it all comes together. Until then, I just weaponize my patience. Now, some of you are thinking, but what if you're wrong? What if alts do 100x next month while you're sitting there waiting for rate cuts? Great question. My answer's simple. If I'm wrong and the market rips to Valhalla next month without the Fed doing a damn thing, amazing. I hold alts anyway. My high conviction bags will pump. I'll make money. My plan doesn't stop me from participating in upside. It just stops me from chasing it foolishly. But what if I'm right? What if we're still months away from the real macro tailwinds? What if this chop and bleed continues because money is still tight and retail is still sidelined? Then I survive. I preserve my capital. I don't get chopped into pieces chasing false breakouts. And I'll be cashed up, patient and ready to deploy with precision when the real tide turns. Either way, I'm good. That's the power of a sound strategy. So here we are. You've got two paths. Path 1, keep doing what everyone else is doing. Chase the latest indicator, burn through your capital on false hope, get emotional, get frustrated, get wrecked. Join the 97% who end up as exit liquidity. Path 2, choose weaponized patience. Build conviction in quality assets, understand the macro drivers, wait for the actual signals that matter, the shift in monetary policy, act with precision when the time is right. Join the 3% who not only survive but thrive. I know which path I'm on. The question is, which path are you taking? Drop a comment below. Let me know your thoughts. Are you tired of the indicator circus?